All right, let's move on now and move on to the next discussion now. It's on the power sector. Sumit Kishore, Executive Director at Axis Capital, is now joining in on the show. Thank you very much for joining in. Let me begin with your views on IEX. Now, yesterday, the stock took a bit of a knock. And I think from July 24, which was the first time when the market coupling news came to the fore, the stock has fallen close to about 30-odd%. Give us your sense of the way this draft paper that has come out. We still have time. Feedback is going to be open, I think, till the 16th of May. How do you see this play out?
So I think the CERC draft power market regulations came out recently, and they signal that market coupling framework finalization by the regulator is now in, and there is potential implementation of market coupling by the end of FY27. What that does is that you'll have uniform price discovery post-market coupling, and that shall remove the arbitrage that concentrated liquidity at IEX. So market coupling shall cover not just the day-ahead market, but the real-time market also, which together accounts for over 75% of the total transaction volume on IEX. There'll be different commencement dates for each of the segments, but we'll start most likely with the day-ahead market. So I think, as you mentioned, the public comments are due by the 16th of May, and subsequently, after the final notification comes, there would be a 6-month time frame for the implementation guidelines to be rolled out. So my sense is earliest by end of FY27 is when market coupling goes live, unless there are other events to push it back further.
I got that. And Vivek Sangla is also with us, MD and CEO at Power Exchange India. So just to for our viewers, right, I mean, who are focused on the stock, for example, Sumit, morning Prashant here, this is happening, right? There's not a question of whether it'll happen, but as you say, it's just, I mean, the timelines, it's about timelines now.
It's about timelines.
Yeah.
That's right.
Right. And in this framework, what will be the role of IEX? So IEX, I mean, so Grid Controller of India is essentially going to which is a government not-for-profit company, which is where price discovery will happen. And IEX is where the bids will be aggregated. So Grid Controller is like the exchange and IEX is like the broker?
So all the three exchanges, IEX, PXI, and SPX, will essentially become bid aggregators. And Grid India, which is a market coupling operator, now would discover a uniform price for all the three exchanges for a given time slot of trading. And this would be applicable to the collective market transactions, starting with the day-ahead market, and maybe in future apply to the real-time market.
Just one more quick question before we get Vivek in. What were the valuations of IEX before this began, in a sense, the peak valuations? And now that it's no longer setting the prices, it's only going to be aggregating, what is the appropriate valuation multiple one should ascribe to IEX?
I think before we get into valuations, what is more important is to see the impact on the denominator, which is the earnings. So I think IEX has had a long entrenched leadership in the sector, a technological edge, and its customers have benefited from its data analytics and services over the years. So market coupling basically presents a risk to the market share in day-ahead market and real-time market for IEX, where practically have 99% plus market share. And if price competition on fee or commission kicks in, there is potential for higher downside to revenue that might pan out over the next, as market coupling gets into force. But I think it's very important to note that exchange is the most efficient mechanism to bring the buyer and seller together. And in the power markets, India's long roadmap of power demand growth, rising renewables, storage solutions are all tailwinds for rise in the share of electricity that gets traded on the exchanges as part of the total electricity transacted in India. So I think beyond markets factoring in the uncertainty around the extent of earnings cut or the impact for IEX, we are structurally positive on the growth roadmap for electricity exchanges on a long-term basis.
Okay, got that. Let me bring in Mr. Singla as well. Mr. Singla, so let me ask you this, right? As Sumit was talking about, one is, of course, the roadmap for electricity exchanges. You're one of them. But in the shape and form that we were discussing earlier, this is is implemented, what is it going to do to your earnings, sir? Or for that matter, earnings of an electricity exchange like you?
So good morning, everyone. I think market coupling is the inevitable requirement of the power sector, which has already been delayed a lot, and now we can see the light at the other end of the tunnel. And as far as power exchange is concerned, we already have the leadership position in other products like DAM and REC. And once this level playing field is available for all the exchanges, definitely PXL is going to increase its market share in the DAM and RTM segment also, and which will eventually benefit our top line as well as bottom line significantly. Ultimately, what I see is we have been in touch with all the buyers and sellers and customers in the market. They have been supporting us in other products, and I don't see any reason why they will not be supporting us in the DAM and RTM segments once the market coupling is in place. And definitely we hope to be the market leader in power exchanges once the market coupling is in place.
Okay. Mr. Singla, the CERC is also considering cutting the fee cap from 2 paise to 1.5 paise. And here the argument seems to be that now that you're no longer discovering the price, you're only sort of processing the order, enabling the transaction between the buyer and the seller, you can lower the rents. What is your own view on this, and what kind of feedback are you going to lobby for before 16th of May?
Let's see going forward, because the expenses of the exchanges are going to remain same what it has been in the past also. With the market coupling, I don't think there is going to be any reduction in the expenses that exchanges are making. And we'll discuss with CERC the logic behind, the rationale behind keeping the prices same or increasing or decreasing it over a period of time.
So, Sumit, what are your earnings? What will they do in earnings per share, IEX, now? Once this comes into place, I think they did 5 rupees in earnings per share last year. What's the estimate?
I think the estimates are as published basically for FY28. We are still hovering around 5.5 rupees. But the bigger question here is 75% plus of the volumes are in the collective market transactions, which could get impacted because of the market coupling order. So one needs to see that the long leadership position that IEX has had would allow it to retain what percentage of the market share, which is 99% plus in the 2 market segments of traded market and real-time market. So the extent of where this market share settles and whether the pricing remains at 2 paise per buy or sell leg or 1.5 or wherever it goes to, because competition would become a tool, would see pricing as a tool to get market share. That's something that needs to be watched out. So I think earnings per share is right now a volatile number. It depends on where the market share really settles down.
Got that. Mr. Singla, thank you very much for joining us. Sumit, appreciate your time here on CNBC TV 18. We'll track the story with both of you in the times to come as well. 100